Good morning. Welcome to Stock Market Today. It's Monday, November 25th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email giving you daily stock ideas to consider in your inbox every trading day before the market opens. Just a quick programming note. There will not be a show on Friday, the day after Thanksgiving, and there will not be a call on Thanksgiving as well. So U.S. equities were higher in Friday's trading. However, the S&P 500 snapped a 6-week winning streak. Financials led while consumer discretionary, industrials, and healthcare also outperformed. REITs, energy staples, and tech finished lower on the day. Treasuries were mixed. The dollar was stronger versus the euro. Little changed on the yen cross. Gold ended flat. WTI crude was down 1.4%. In Friday's trading. So we get to the desk here this morning. S&P futures are up 30 basis points after snapping that 6-week winning streak last week. Asian markets were mostly higher overnight, and European markets are seeing solid gains here this morning. Treasuries are unchanged to slightly weaker, with the curve steepening. The dollar is stronger versus the yen and the euro. Gold is down 30 basis points, and WTI crude is flat. And as we dig in to start the holiday shortened week, as we said, S&P 500 snapped a 6-week winning streak last week in this consolidation that's playing out above key support levels. Obviously, key support 2920, that's the rising 200-day moving average. Also playing out above the near-term support level that we've been highlighting in the 3030 to 3050 range, and then below that, let's call 3,000 support, round number area. Market kind of lifting here. RSI is exiting overbought levels, but remains in bullish ranges. So we still have momentum, confirming the price action that we are seeing here in the S&P 500. And then add to that, Chaikin money flow being bullish. So the indicators are confirming price. Price is above the breakout level and holding above support. We're seeing a bit of a near-term consolidation within the context of a bigger picture uptrend. If you had to sum up the market over the past week in one sentence, it would be near-term consolidation within the context of a bigger uptrend. The uptrend is confirmed by momentum and money flow. That's exactly how you'd sum it up. And we stay the course, leading stocks and leading industry groups when those stocks become oversold. Let's talk about the market in a minute now. What are we writing about in the note to Chaikin Analytics clients today? Well, we talk about the snapping the 6-week winning streak, but we are still in an uptrend. Financials are established leadership in the market at this point. We'll take a look at that chart. But, we've been talking about the emerging leadership of financials. I think it's established leadership right now, especially as the 10-year yield holds a key level. We'll look at that chart a little bit later in the show as well. We're seeing further signs of life in commodities. And as we said, futures do point to a higher open here today. Taking a look at the power bar now. Major indices from a power bar perspective. Dow had a nice day on Friday, up 41 basis points. Actually saw this ratio tick below 2-to-1 bears to bulls. 5 bullish or very bullish stocks, 8 bearish stocks. Still skewed in favor of the bears, but less so after that move higher on Friday. S&P 500 taxed on 24 basis points on the day, 124 bulls to 94 bears. NASDAQ, call them flat. Software had a tough day. Kept the NASDAQ in check. 30 bulls to 14 bears there. Small caps, slight outperformer relative to the S&P 500 on the day. 658 bulls, 325 bears. Bonds uptick slightly, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board are mixed. Let's hit our stock of the day now. Speaking of financials as being established leadership, we've been saying pay attention to the banks, especially as 10-year yield works its way higher. We'll take a look at a name like Lakeland Bank Corp that now sets up. LBAI, the ticker symbol here, closed at 1661, up 15 basis points on the day. Has a very bullish Chaikin Power Gauge rating due to positive expert activity, attractive financial metrics, strong earnings performance. Stock has some weak price volume activity given the choppiness here, but I'm going to give it the benefit of the doubt. Why? Because the 20 factors rolled up give us a very bullish rating. We are above a rising long-term trend line, and we are in a strong industry group. Market and model now in agreement. Stock's been bullish for the better part of 2019. but never could get there from a relative strength standpoint. Now we've been bullish in September. We're outperforming the market. Stock is oversold with bullish money flow as it pulls back here to test support in the 1650 level. Couple ways to trade this one. You want to play the setup here? You want to play the setup on an oversold stock that's outperforming the market with bullish money flow? Yes, I like it. Or for you breakout / momentum traders, you've got a key line in the sand here. Call it 17 and a quarter. A break of 17 and a quarter to the upside gets you involved as a breakout / momentum trader. So two ways to play this one. Either way, Lakeland Bancorp fits the bill for the type of name that you want to own. It's a leading stock in a leading industry group. The stock itself is outperforming the market. It's oversold with bullish money flow. This is the setup that we talk about. You can play it if you're a breakout trader. You can play it on a breakthrough 17 and a quarter. Either way, you need to be paying attention to LBAI here and now. Let's look at our sector tracker now. Moving to the major sectors over the last 5 days. Healthcare has really been a solid group over the past week of trading. And it's been towards the top of the list really for the past few days that we've been talking about this. So more than a week of trading. Healthcare has been a solid group. There's your financials. We're going to look at the chart a little bit later on in the show. But financials continue to do well. And as I said, I do believe they are established leadership at this point in the game. Utilities towards the top of the list. A little bit of a counter trend rally. Comms, top of the list. Everything else is lower over the last 5 days. Staples, energy, tech, and industrials are middle of the road. We want to see tech get back into gear, but software kept that group in check on Friday. The day before that, it was the semis that were under pressure. Catching a downgrade at the semi-cap equipment space by one of the big sell-side shops. Materials moving towards the bottom of the list here. Been under pressure for the past few days. Real estate, right? There's a part of that defensive, the rotation out of the defensive names. And discretionary has been a mixed bag. Getting some retail earnings, and the retail earnings have been a mixed bag. It's really been company-specific news. No real themes or takeaways from retail earnings. What I will note, though, is we started to highlight retailer as a group because it turned bullish at Shaken Analytics, and it remained bullish even with the choppy trading and even with the downdraft initially. Retail has caught a bit of a rebound, remains bullish at Shaken Analytics. I think it's it's an area of the market where you want to start to look for potential opportunities, as we've been highlighting over the past few days. Let's look at our industry in focus now. Software and services. Speaking of, over the past 6 months, the group's been an underperformer. It's underperformed the S&P 500 by 1.62%. Remember, this was a big leader. We loved software and services throughout much of 2019, but when the facts changed, we changed our mind, began to underperform. Rating went from bullish to neutral to bearish, so we got out of the way. We're paying attention, right? We're always going to pay attention. We're always going to look for opportunities. We never remain dogmatic in our views, and we now have some solid future potential. Right, power bar ratio 42 to 33, bulls to bears, currently ranked number 13 of 21 subsectors, having moved up one slot over the past week. Some of the names there that you might want to consider: TiVo, TIVO, very bullish; Commvault Systems, CVLT, very bullish; and Sykes, SYKE, a little bit more of a services company, also has a very bullish Chaikin power gauge rating. Here's what we mean on the group, though: XSW, SPDR, S&P Software and Services ETF has a neutral Chaikin power gauge rating. Trend is strong as it's regained the long-term trend line, which is now turned higher. However, notice the S&P 500, right? If we looked at SPY, S&P 500, a lot of the major markets are trading at highs. Software not there yet. And here's what we were talking about. We love software. We loved software through here, bullish and outperforming. Then it started to get dicey. Then it started to underperform. Then the rating went to neutral. Then the rating went to bearish. We're back to neutral. And what's interesting to me is the intensity of underperformance is waning. Money flow is turning bullish again. I'm paying attention to software again, and I think you should too. Start to do the work. Not 100% there yet, but on the margin, it looks like this underperformance is changing, and we want to be paying attention to that. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Here's that retail trade, right? Retailers were all over this map, all over this screen last week. Well, JW Nordstrom beat and had better margins. Stock was higher by 10.5% on Friday. Macy's caught a rebound after a big sell-off following their earnings. L Brands had some earnings, reported their earnings, but also seeing some potential deal rumors L Brands up nearly 5% on the day. Gap, positive pre-announcement. Still a bearish stock here at Chaikin Analytics, but a positive pre-announcement was enough to send that stock higher by 4.44% on the day. And Smucker, that's JM Smucker rather, up 4% following their earnings announcement. On the loser side of the board, Intuit, part of the what weighed on software, Intuit down 4% following their earnings announcement. Didn't see any real news on Hess, though oil was lower by about 1.5% on the day. That could have weighed on Hess, down 3.8%. STZ, Constellation, made some comments on accounting around Canopy growth. Stock lower by 2.9% on the day. Cody, remember Cody, they are buying Kylie Jenner's brand. Cody down 2.7%, neutral stock at Chaikin Analytics. And Abiomed just continues to see some follow through to the downside after an update on one of their devices. ABMD down 2.5% on the day on Friday. Here's what we mean when we say financials are now established leadership. Financials, XLF, the Financial Select Sector SPDR fund, is trading near an all-time high, along with the S&P 500. Nice breakout through the 2850 level, above a rising 200-day moving average. XLF has a bullish Chaikin Power Gauge ETF rating, 29 bullish or very bullish stocks, only one bearish or very bearish stock. So this is a great way. Let's see how we can combine the two disciplines, right? Classical charting and trend analysis, right? Confirmed by a bullish ETF rating, confirmed by the power bar ratios, which we have at Chaikin Analytics. Look at the RSI. RSI for XLF has not become oversold in nearly a year. Breakout is confirmed by momentum as XLF became overbought, and the RSI remains in bullish ranges. And on a relative basis, we've clearly broken the downtrend, actually pulled back to retest it, rallied, and continue to rally higher. This is what I mean now when I say financials are established leadership. Absolute uptrend trading near all-time highs. Bullish ETF power gauge confirmed by a power bar ratio at Chaikin Analytics, and just some classical relative strength work, XLF relative to the SPY, showing us that the financials are now established leadership in a trend that is confirmed by momentum. And here's the key driver. 10-year yield rallying from these lows in the August-September timeframe to retake the 50-day moving average, which is now acting as support. Still below the 200-day moving average and below resistance at the 2 to 2.1% level. So still some work to do. But this is a key level. If the 10-year yield holds this 50-day moving average, continues to move higher, ultimately breaks through 2% through the 200-day moving average, this trend is going to continue higher. And this trend is likely to continue higher. They key off of each other. This is that intermarket work we talk about. We watch yields closely because they impact the equity market. If this yield continues to work higher, and odds favor that it will, because look at momentum, a series of higher lows here for the RSI. So odds favor the 10-year continuing to work higher in the near term. What does that mean for you equity investors out there? You want to continue to focus on the financials, which are likely to continue to outperform, and you want to continue to steer away from those bond proxies, those areas of the market that we liked a lot and no longer do. Utilities, real estate. Here's why. This is where our intermarket analysis has come in to drive those views. Take a look, take your cues from the 10-year. They're going to help you in the equity market. We continue to like financials. We've been highlighting them. Finally, we're starting to see some signs of life in the commodity complex. This is DBC. The Invesco DB Commodity Index Tracking Fund has retaken the 200-day moving average, which has shifted from declining to flat. As it works its way towards the top end of this consolidation, the trend is at least neutral. No longer down, it's at least neutral. Where we're seeing signs of life is in this shift in the momentum. The RSI is now holding bullish ranges, increasing the odds that DBC will work its way higher out of this consolidation. And then what we would ultimately like to see is start to see some outperformance relative to equities to start to get excited about potentially adding commodities as an asset class into diversified portfolios across asset classes. So keep an eye on DBC. We're starting to see some signs of life, not quite there yet, but it's something that we want to pay attention to. that is going to wrap it up for today. Head over to chaikinanalytics.com/today to sign up for that email. I'll be back tomorrow, and I'll be back at Wednesday. No show Thursday, no show Friday. Have a great Monday, everyone.